Let's talk to Mike van Dulken. He is the head of research at Accendo Markets. Very good morning to you, Mike.
Morning.
Right, I'm going to cover a couple of stocks in this segment. Let's kick off with HSBC. This is a longer term chart. What's this, 17 years, I think you said off there?
Even longer, actually. The low is 1995, but that's by the by. I'm looking more at the decline from the highs of 2001. And we very recently hit a bit of resistance just shy of £8 on HSBC, following a break above 768, which have got many people very excited. But I think you do need to go back. Markets are a bit short-termist.
Yeah.
I think we need to bear in mind what we are facing longer term, and there is potential there for long-term falling highs resistance, which did creep in there at 8.
So that's an absolute key chart point for you, around what, 790?
For me, from the standpoint that, well, it's actually almost bang on £8. If we go to the next slide, you can see it a bit shorter term. It really did scythe through there at £8. So for me, at the moment, a break above 800
Yep.
would be very meaningful, opening the door to 830, 850, even £9. Whereas if we break back below that 770 level we recently broke above, it could mean that that resistance is even more powerful and sends us back towards the lows of September there around 710 or so. HSBC have been benefiting from favourable outlook for the banks,
Yep.
tax benefits, Asia bias, exposure to that demographic has been doing extremely well. Strong dividend yields, good for the income seekers. So it has a lot of things going for it. But that's not to say that when the markets turn, a FTSE heavyweight like HSBC can be one of the ones that gets penalised more harshly, especially after such a strong rally over the last 9 months or so.
Understood. Well, I've got to say, it's very good homework. 2 absolute key chart points there. Let's move on to Burberry. Again, a longer looking chart. What are your thoughts there?
Yeah, not quite as long, but again, we needed to. I was looking at this with a contact yesterday who pointed out a breach of a trend of rising support was about 6 months old or so, and I thought, well, hang on, let's have a look even further back. So there's an intersecting just shy of £17. It goes all the way back to mid to late 2013. So if we move to the shorter term chart, we can see there that we breached that yesterday, which could be the precursor for a bearish flag pattern. We had been in that. The bearish flag itself is that short-term rising channel we saw from October. We left that very sharply yesterday morning after disappointing results, and that could be the precursor for taking the shares back to the lows, near the 2017 April lows of 1550 or thereabouts, perhaps even lower. Results disappointed.
Yep.
For me, it was.
And they're going even more up market.
Well, this is my problem. It's a brand which sits somewhere between the upper end of accessible fashion
Yep.
and then luxury.
Yep.
Now, the online is important for everyone, as we're seeing. I mean, this morning we saw results for, it was at Halfords, online, really important. Several other companies in the retail sector saying the same thing. And Burberry is doing very well from online. But think about taking your online so far can damage the luxury image you're looking for. It may well boost your margins and your sales, but if it's to the detriment of your image, one day that's going to be, put you in trouble. At the same time, if you want to maintain that luxury image, you need that very expensive bricks and mortar retail presence, which is a hindrance for your margins.
Right.
So you need to decide where you are.
Yeah.
And I think they're still discovering that. Back end of last year, we had the new turnaround plan because things were not going as great, and they let slip that margins weren't really going to improve before 2021. I saw the shares hammered by 15%.
Yeah.
I think for me, the fact that yesterday's trading update started with a reiteration of the turnaround plan meant that the numbers I was going to read later weren't going to be anything special, and they missed expectations. They showed a real reliance on online, which makes me think that the retail presence is just becoming too expensive for them, and they're going to need something special, perhaps being ahead of schedule for the next trading updates to engineer any kind of recovery, because the post-Brexit bounce was almost 30%. How much of that was just a weak pound?
Yeah. Mike, thank you very much.
Thank you.